Hi folks, Lee Gettess with the Market Sense for the week of October 15th, 2013. The charts I stare at all day long come from the Trade Navigator software, so you know they're easy on my eyes. And the first chart we're looking at is a weekly bond market chart. And you can see bonds have sort of weakened this week, and that's a little surprising because they're doing that at the same time that stocks have kind of played around and don't look all that strong. Uh, the rally back up certainly was due for a back off, and the support that they've backed off here in the 132 area is what they need to hold if they're going to continue right up. Now, they may not continue up, even though we have divergence in the indicator at the lows here. They have rallied back up right to the mid-Keltner channel, which is the area that they could turn back down from to test the lows. So they're kind of in a battleground here. They're either going to hold this support and probably break above these highs and head up somewhere in this area, or they're going to continue down and test the lows or test the lower Keltner band anyway. So this will be an interesting time to see what they wind up doing here. The resistance is up here in the high 133s, close to 134 again. And again, the support that they're holding is right around 132, just slightly below it. If they break down, they could still, kind of draw a line through the middle of these 5 or 6 bars here at the bottom. That gives us around 130, about 130.04. That could be potential support if they're not going all the way to test the lows. And if they hold in that area, that would actually be semi-positive. It would suggest that they're probably going to take these highs out again. But we're getting way ahead of ourselves. There's a lot of trading to go and a lot of garbage news from Washington. So we'll just have to wait and see. Stocks now, on the other hand, if we were looking at these purely from a technical standpoint, they really look very good. This last sell-off was shorter in duration than either of the last couple, and it really looks like they should just pop off that mid-Keltner channel and go right back up, at least to the upper band and probably to new highs again. That's certainly the way I'd analyze them in a vacuum. However, we're not really trading stocks and bonds these days. We're trading politicians. We're trading what Washington has to say. And boy, they could rip this apart in a heartbeat. So it's really difficult to provide any adequate technical analysis, I think. The best support is right down here in the 1680 area, which they seem to be holding above. They have been above the resistance near 1700, which makes me think they're heading up here to 1720, but they also went up above it and have come back down, again, based on news out of Washington. So, you can't rule out them going down to the 1660 area down here at the lower moving average. And for that matter, you can't rule out them taking out these lows and just getting ugly as all get out. I mean, there is no limit to how much damage politicians could do to this market if they so choose. But again, that's what we're doing. We're trading what's going on in Washington. We're not really trading the market, so it makes this analysis kind of futile at this point. So good luck. I mean, make sure you stay out of harm's way and try not to get hurt, because there could be nasty moves in either direction. What we really have, to summarize, you have a market that wants to go up. It's technically poised to go up, but they could get sick and tired of Washington and rip this puppy apart in a heartbeat. So very dangerous situation here. So that's what we've got for you today. I hope you can find something profitable to get yourself into, or at least avoid all the danger. Thanks for checking in to see what we think.